Welcome to the Wealthsteading Podcast. This is episode 524. Today is June 26, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. In the co-pilot seat today, I have my son, Joe. We're going to talk about recent news items in the stock market and about how, it seems like the market one day is two steps forward, then it's one step back. I want to ask the question, is the glass half full or is it half empty? You know me, I'm a cynical optimist. I personally think the glass is half full. I think you could make that argument over at least the last 2 years, if not more. Every time there's been a pullback, every time there's been drama in the media, whether it's concern about a new Fed chairman or whether it's concern about tariffs, bottlenecks with supply chains, AI circular investing, AI bubble, Straits of Hormuz, whatever it is, there always seems to be an advancement in the market once the turbulence is over. For now, I don't think that's changing. We're going to start off today. I don't think I said it, we are live on YouTube. We'll see kind of where this leads us, but we're going to start off by talking about Google, Alphabet Google news story, and then we'll see if we get comments and where it goes from there. But in terms, Joe, of what's going on with whether the glass is half full or half empty, what's the story on Google?
Well, a lot of people are real nervous because a few key people from Google, whatever that means, right, have left. So two of which are VPs in engineering that worked on Gemini, as well as two others that are big contributors to Gemini and their AI models.
And one of them is a Nobel laureate or something for AI, right?
Yep, that's right.
Okay, so...
And they're going to their competitors, right? Anthropic and OpenAI.
OpenAI. So the glass half empty scenario, and we saw Google drop, 3 or 4% earlier in the week when this story came out. Keeping in mind that over the last, say, 18 months, Google's up like 110%. So, a weekly or a daily fluctuation of 3 or 4% to me isn't a big deal. And you do see these positions drastically moving 5-10% in any given day. I don't put all my eggs in one basket, right? I own 138 stocks, somewhere around there. So generally, if one goes up 5%, 2 or 3 others go down or something, right? It just kind of works itself out because there's a large diversified portfolio invested in things from technology to the hyperscalers, but also to the nuts and bolts of the economy. Whether it be what I consider the deep state guys that we've talked about before, like an Intel, a Google, or even a Boeing, or whether it's just down and dirty total industrial companies, old school, like railroads, right? I own 3, maybe 4 railroads. I own a couple copper mines. The portfolio is vast, like the U.S. economy is vast. And I think that if you can model a portfolio like that to the U.S. economy, then you get the strength and resilience of the overall economy. And sure, there's going to be ups and downs. Bottom line, I've been doing this over 40 years, and I keep winning. So I digressed way off the topic. I don't even remember. We're talking about Google executives leaving, right? Or technology guys leaving.
Yeah, is the glass half full or is it half empty?
So the half empty part of it is that, hey, Google's losing all of its talent, right? Let's sell the stock, let's panic. That must mean employees are unhappy, or they don't see a future there, or they don't think they're going to make enough money there, or they think there's better opportunities, the grass is greener at Anthropic or OpenAI. That's glass half empty. I have not sold my Google. I still would be adding to Google. I like it. So obviously I think the glass is half full. How would you characterize the glass as being half full?
Yeah, I'd say obviously Google's people know what they're doing, right?
Right, or they wouldn't be getting poached by the competition.
Exactly,
right?
Yeah. They know what they're doing. They're good at what they do. So Anthropic and OpenAI want those people. So.
Yeah, and so the other guys must be behind Google because they're poaching from Google.
Right.
That's the way I would look at it.
Yeah.
So who's right? Yeah. I express opinions here. People think I'm biased. I am. My bias has made me very wealthy. But that's all it's about. It's about opinions and positions. And so if you think Google's behind the curve and their talent's leaving, yeah, then go invest somewhere else. I personally think the glass is still very much half full at Google because it's not only about AI, it's still about search. Because again, you go back a year ago, people were saying search was going to die. Google was going to lose all its advertising money. Not the case, right? They're making more money than they ever have. They're involved in the cloud. They're deeply involved in enterprise software. They're involved in autonomous cars. I mean, as I've mentioned before, they're totally tied to the Pentagon and the deep state.
Yeah.
I look at any pullback in Google as a buying opportunity personally. And again, it's opinion. It's an opinion backed up by that's where my position is. If I'm wrong, I lose money. Don't do what I say. Do what you think is right, but form your opinions. Most times, though, the glass is half full if there's a reasonable, rational, long-term reason to why you have that bias or that opinion.
And the glass might be half empty for OpenAI, right? Today they announced that they might not be going public this month or this year.
Yeah, they're supposedly postponing. That might have something to do with some other big IPO recently that hasn't gone to the moon just yet, hasn't quite made it to Mars. We are definitely seeing, again, this is half full, half empty stuff. One day, the media will come out and tell you the market's just overheated. We've got all these IPOs coming onto the market. The next day, they'll tell you, the market's going to sell off because, you have to sell Google to buy SpaceX. Well, you don't, right? If you look at 2 weeks ago when we had a pullback, I think the NASDAQ alone lost something like $2 trillion, right? That was more than enough to buy not only the little bit of SpaceX that came onto the market, but you could buy the entire company for the amount of money that in a few days pulled out of the NASDAQ. And you know what? It's back to record highs again. So again, day to day, I ignore the fluctuation. I look at the reality of it. Speaking of which, I'll tell you another market way that you can know that Google is again, I think half full, not half empty. They just got moved into the Dow Jones Industrial Average, which the shocking point to me there is, why has it taken this long?
Who'd they replace?
Verizon.
Verizon
got kicked out, and I sold my Verizon a long time ago. Verizon had broken my heart many times. And that's an example
as a customer and an investor.
We won't get into the customer side of it, but definitely as an investor, there was a time when Verizon was a fantastic stock. People would call it one of those hold forever. Well, then it didn't. It just petered out, especially after the pandemic. And I had held it because it's a utility. I mean, obviously, it's not going to go out of business. People pay their bills every month. So it's like a utility. It paid a great dividend. But, over the last, I don't remember if I held it for 4 or 5 years over my last period of it, but basically I ended up breaking even because, I was collecting 5 or 6 or 7 or more % dividend, but the principal of the stock was going down by that much every year. So, at the end of 4 years, I ended up barely making anything, if nothing at all. So, you don't keep stocks forever. They have a cycle. They come in and out. It's surprising it's taken this long for Verizon to get kicked out of the Dow, and I'm surprised it's taken this long for Google to go into it. But I think it should have been there a long time ago. My money's definitely on Google.
And Dow's making other interesting choices, right? Honeywell's
a very interesting one. So Honeywell, another company that's broken my heart from an investing standpoint. I've been a long-term investor and believer in Honeywell. It's part of my overall electrification trade. I mean, you think of all the controls and the switches and the high-end components that Honeywell makes in everything from aerospace to industrials to medical. I mean, just across the board. Regular old, HVAC units to things that are on the most advanced military equipment. Honeywell's got a share of that. Their stock is done lousy, right? And this gets back to something can be a great company and not necessarily a good stock because it comes down to what price did you buy it at and where's the price at today. Honeywell, though, because they were probably too much of a big conglomerate, they're breaking up now into two separate parts. There's going to be the traditional Honeywell part focused on the controls and the sensors and the electronics, and then the new company, which is going to be Honeywell Aerospace. They're very much going to the GE playbook, which again was a company that had broken my heart for years because GE is an amazing, fantastic company, but it took a breakup of the big conglomerate to really unlock the value. GE split up into three companies. I don't remember if it's four years ago, whenever it was. Those, for the most part, GE Healthcare has struggled, as all healthcare has. As a sector, healthcare hasn't done that great. But man, the energy side of GE with GE Vernova and then GE Aerospace have just done fantastic. I am anticipating good things from Honeywell as well. I plan to, and the split will be later. I think it's either over the weekend, maybe even Monday or Tuesday when the actual split occurs, or the splitting of the two companies. I plan on holding both. Time will tell, but I think it's a fantastic part of the electrification trade overall. I digressed. Getting back to your question about the Dow, the interesting thing there is Honeywell, legacy Honeywell, is staying in the Dow, and the aerospace company is spinning out. I plan on holding both of them, and I think it's a really good sign that legacy Honeywell is staying in the Dow because, the Dow Jones is renowned. Dow Jones isn't a direct reflection of the overall U.S. economy, but it's a pretty big bet on it. And when especially foreign money comes into the U.S. markets, a lot of it goes to the Dow companies. Even losers, we were talking the other day about Nike. I'm shocked Nike's still in the Dow because it's been a losing company. Has not broken my heart though, because I've avoided investing in that one.
Back to spinoffs, they've been doing well though, right? You mentioned GE, but also Fedex recently did a spinoff.
Fedex did a spinoff, and that's another one that's been a pleasant surprise. Fedex has done very well since we purchased it. When it did spin off its freight division, I was actually going to sell it the week it spun off, and I didn't. And I'm actually glad I didn't because I don't know, is it up?
It's up over 10%.
Over 10%, and spun off a month ago or something.
Yeah, no doubt.
So, yeah, I'm very pleased with that. And again, you'll see news in the media all the time about, FedEx or UPS, they're down because Amazon's doing more of their own logistics. That's true. But, you don't have to have a poverty mindset or a scarcity mindset where just because Amazon is going to do better in freight, that doesn't mean that FedEx won't, or doesn't mean that UPS won't. They might not. And personally, I'm not invested in UPS. I am invested in Amazon. I am invested in FedEx and now FedEx Freight. I don't, again, because of the price and the valuations, I don't like UPS right now. But there's more than ample opportunity. And what I really like about FedEx is their opportunity more in that just-in-time side of things. They're really focusing on the business of, getting medical products to where they need to be overnight. If your production line goes down, you're not going to ship that stuff through the U.S. mail, right? You're going to ship that through FedEx, where it's going to be there tomorrow by 9 a.m. or whatever. So high-end, high priority, high price products are what's shipping with FedEx. That's the part of the K-shaped economy I want to be involved in with right now. I do think UPS has legacy issues. And so we'll wait and see.
Okay, and then other news in the news is Apple. They went out and raised prices yesterday, and the market didn't like that.
Yeah, glass half full, half empty, right? Yeah. So the half full version of the market, at least this week, next week it'll probably be something different story. But right now they're saying, well, Apple's raising prices 20% because of all the memory chips, right? They have to pay more to Samsung and more to SK Hynix and all these other companies. Micron have to pay more to Micron for all these memory chips. So that means that Apple, bottom line, or their profits are going to suffer. Dell Computer, I think, tanked. I didn't see that in the news, but we own that one as well. And by the way, we don't own Apple, but we do own Dell. I think Dell was down maybe 10%. But the half full version is that all these input costs are going to cost these hardware companies money and profits? Maybe, maybe not, right? Remember 4 months ago when the Straits of Hormuz was shut, what happened? Gas prices skyrocketed. Did ExxonMobil, did Valero, did those guys make money or lose money? They made money, right? Because they had pricing power and they passed those price increases onto their customers. Will Apple be able to pass on 20% price increases? I don't know. They've been doing it for 40 years, right? I am watching Apple, and if it dips low enough, I would buy Apple. Again, it's not in my portfolio now. I'm not selling my Dell. I'm not selling any of my other hardware. I'm watching Apple though, and if it dips low enough, I would buy it because I think long term, Apple is still a great company. They have a China problem, which has kept me out of them. That's the issue I have with Apple, is too much manufacturing and too much reliance on China. So we'll wait and see on that one.
Okay, and another thing we waited to see on before last podcast we did was Ciena, right? It was earnings were coming out the next day, and you were staying strong in Ciena.
And I have not sold my Ciena position. I have no plans to sell my Ciena position. We mentioned that, hey, they are backlogged. I mean, and again, this is public information. Companies come out, they announce their earnings. Most of the things they say, everybody knows before they say it. We knew that Ciena was backlogged. That's actually why we went in and bought more of their suppliers. And I can never remember all the names. Lumentum, right?
Yeah, Coherent.
And Coherent.
Yeah.
We'd recently added, and I don't know, 3 months ago or so, we bought those guys, which again have done extraordinarily well, even though they were at record highs and they'd done insanely well to begin with. But when you're in these expansion modes, the negative side, the glass half empty is well, it's in a bubble. But the glass half full side of it is that it's in a bubble because people were buying it and demanding it. When it came to Ciena, we knew they would be backlogged, but my argument there for being glass half full is that they have pricing power. They're sold out for the next 2 or 3 years, and to me that means that's a strong environment to be in, right? I wish my products, if I sold products, I'd want them to be sold out. I wouldn't want to have to be hiring sales staff to go sell stuff because I had capacity. I'd want to be laying off salespeople because I don't need them because people are buying my products, right? That's the side I look at, the optimistic side. And the interesting thing I think is that when Ciena announced that, they did drop like maybe 20%. And again, I didn't panic or worry because I don't know, Ciena's up like 800% or something.
Yeah. Since we bought it.
Yeah. Over the last couple of years. It depends when you get in and out of it. So yeah, I mean, a 20% drop isn't something you want to see, but at the other time, if you're up 800% or whatever it is, you don't care. The interesting thing though is if you look at Micron, they announced either late last week or the beginning of this week, I don't remember. They too were backlogged. Their stock skyrocketed. It was up another double digit.
Yeah, it was like 15%.
Yeah,
it was just yesterday or the day before.
Yeah, so it was up. It was up amazingly, and it had the same story. So it just depends on how the media spins it and how people interpret it. But are we in an AI bubble? I think there are. You won't see me investing in OpenAI. You won't see me investing in Anthropic. But hey, I'm fully invested in all the other stuff. The things that are making money today, whether it be ASML, building the equipment that you need to make semiconductors, or whether it's NVIDIA that makes semiconductors, or whether it's Micron that makes a semiconductor memory chips, or whether it's the old legacy guys like Intel, which have domestic manufacturing, which is now critically important for national security. We've talked about all these things in the past. Yeah, there's bubbles out there, but there's also glass half full, lots of opportunity.
And what's the opportunity in oil right now? It's dropping real fast.
Yeah, again, another glass half full, half empty. When all the chaos, and this is the case I've been making if you followed the titles of many of these episodes about, cashing in on chaos in 2026. Chaos is just an opportunity, and while it may be bad for some people, it's good for others. Obviously, the oil companies earlier this year have really benefited from the closure or the chaos that's happened in the Middle East. It's bad for other companies. Go look at the Indian, their currency, the rupee, or their stock market, not doing well. Chinese stock market not doing very well. Even people that should be doing better, like the Japanese. I think the Japanese yen right now is at all-time record low against the U.S. dollar, something like 165 yen or something to the dollar. That's because of the problems. A lot of it, not all of it. A lot of it's because, especially with like an Indian market, that's directly related to the higher energy costs because of the chaos in the Middle East. Just as we saw the chaos caused by Russia invading Ukraine caused major economic and stock market problems in Germany that they're still working through. But that creates opportunities somewhere else. And I keep coming back to the fact of those opportunities, coincidentally or not, are good for the U.S. Higher gas prices, good for the U.S. because we're an exporter of oil. Sabotage of the Nord Stream pipeline, a lot of conspiracy theories as to who did or didn't do that. Bottom line, it's been excellent for the U.S. economy. So there's opportunities everywhere. I think the big interesting thing on oil, it's below $70 today, right?
Yeah.
Even just a week ago, people were saying, oh, it's going to take months for oil to drop.
There's so much demand. Everyone's got to fill their
Everyone's going to fill up the reservoirs. Oil could still be going to $100 and some dollars. Well, we'll see. Time will tell. And I think there was a ship even still got attacked in Hormuz this morning. Yeah, we don't know day to day what's going to happen. But the bottom line is there's a glut of oil overall. Before all this happened in Iran, they were talking about oil dropping down to $40. I suspect oil is going a lot closer to $50 than it is $100. And I guess the interesting thing is I want to watch and see what gets to 50 first. Does oil get to $50 or does Bitcoin get to 50,000? That to me is the real debate there.
Yeah, you're going to trigger too many people with that.
No, if I wanted to trigger people, I would say that SpaceX is going to 50.
Oh my goodness.
We'll leave that aside.
All right, let's move on. Next week is the Wealthsteading Podcast Anniversary.
Yes.
What year's that?
Yeah, and I forgot about 12 years.
12th year?
12 years, yeah. So for 12 years of triggering people and saying things that are controversial and being cynically optimistic. And I don't know what the episode's going to be yet, but I will have a 4th of July episode. I think that's a Saturday, maybe, or whatever. But look for your feeds because I will have a 12th anniversary announcement or podcast. And who knows, Joe? Maybe we'll do something special next week. It's been a while that I've taken you out to lunch, so
maybe I'll get a Costco.
Maybe I'll take you to Costco next week
to
celebrate the 12th anniversary, and that gets back to half full or half empty. I'll probably talk about this when I do the anniversary episode because I haven't dwelt on this part about the business opportunities before. I've never monetized this podcast. I have no intention of ever monetizing it. But the glass is always half full because I don't have to monetize it, right? I've never had to do a Patreon. I've never had to do GoFundMe stuff or affiliate links, any of that stuff, because I make money from trading, my investment business, beyond my wildest dreams. The glass, it isn't a matter of that glass being half full over there. It's like the cup runneth over. So, been doing 12 years of the Wealthsteading podcast, and Lord willing, I'll be here to troll you for 12 more. Wait, until next time, as always, Joe and John wishing you the very best returns.